Hello everyone, welcome to the 100th episode of me learning how to trade in Forex. So in the last video we were going through the country profile for United Kingdom, so we finished off the Eurozone one and we went through the United Kingdom, or we're going through the United Kingdom, so we went through some of the basic facts, economic overview, monetary and fiscal policy, and now we're on to getting to know the GBP, so let's get started. So getting to know the GBP. The GBP must be a pretty popular kid since it has a lot of cool nicknames. Aside from being called the sterling and the pound, GBP pairs have awesome nicknames such as Cable, GBP/USD, and Guppy, GBP/JPY. Impressive, huh? I like to bust the move. GBP/USD is one of the most liquid currency pairs in the Forex market. How come? So GBP/USD is one of the most liquid currency pairs in the FX market. How come? Remember, London has long been a major financial centre in the world, with major business transactions taking place every day. Lots of moolah goes in and out of London. Still, the GBP/USD only accounts for 14% of daily global trades, making it just the third most active pair traded. This is probably the reason why spreads on the GBP/USD tend to be a pip or two more than that of the Euro/USD and the USD/JPY. And traders like me because I've got some nice curves. With so many big-time corporations being based in London, there are many highly attractive investments to be found in the UK market. Couple this with some of the higher interest rates usually amongst the major currencies, the investors may find British securities to be more attractive. In order to get their hands on these assets, investors would first need to purchase some GBP. GBP/USD trading volume is the highest during the European sessions. Right, so GBP/USD volume is the highest during European sessions. During the European session, there's only one during the European session. With potential for strong moves during the New York session when key UK and US data is released. So, with potential for strong move during the New York session when key UK and US data is released. The Asian session doesn't normally provide much movement as European traders are still in bed while US traders have just finished their day. Asian session doesn't normally provide that much movement. But be careful because I can get kinda rowdy. The GBP pairs are very prone to volatile moves because of their lower level of liquidity compared to that of the EUR. So, GBP pairs are very prone to volatile moves. With liquidity growing thin at certain times in the market, the GBP can get caught in one direction, especially if there are large buy or sell orders in that direction. Compared to other currency pairs, GBP pairs tend to react more strongly to surprise economic data releases. GBP pairs tend to react more strongly to surprise economic data releases. Important economic indicators for the GBP. Important economic indicators for the GBP. Consumer Price Index, CPI. The Bank of England looks at this account as a measure of inflation. Looked at by the Bank of England as a measure of inflation. Measures the change in the prices of consumer goods. Yep. So measures the change in prices of consumer goods. Unemployment rate. This is the measure of how many unemployed people there are in the UK economy. So measures how many unemployed people there are in the UK economy. Analysts look at this account carefully because it could bring a leading indicator of future spending. Because it could be a leading indicator of future spending. Could be a leading indicator of future spending. How come? Well, if a person has no job, he has no money. Without any money, nobody will be able to afford tea time. GDP. This figure reflects the state of the UK economy. It indicates whether the economy is growing and booming or if it's stuck in the English Channel and drowning. So, reflects the state of the UK economy. Whether the economy is growing and booming or drowning. Purchasing Managers Index. This index surveys business managers and asks them their view of the current economic landscape. Scores above 50 indicate improving conditions which may lead to expansion, while scores below 50 hint at possible contraction. So, surveys business managers and asks them their view of the current economic landscape. Above 50, bigger than 50, oh no, that means less than 50, so bigger than 50 could lead to expansion, less than 50 could lead to contraction. GfK Consumer Confidence Report. Consumer confidence. This report gauges consumers' confidence about current and future economic conditions. Gauges consumers' confidence about current and future economic conditions. The more confident consumers are regarding the state of the UK economy, the more likely that they will be willing to spend. More confidence equals more willing to spend. What moves the GBP? Changes in monetary policy. Many investors look at the pound for higher yielding assets and for carry trades. Changes in the this is the something policy committee, isn't it? Monetary policy committee. Changes in the monetary policy committee's interest rate alter sentiment towards the pound as it affects the yield of British securities. In addition, changes in the bank repo rate also reveal the Bank of England's outlook on the economy. If the Bank of England officials feel that the economy is hurting, they will either expand quantitative easing measures or cut interest rates, which will signal to the public that the economy is unstable. If the Bank of England feels that the economy economy's rise may lead to inflationary pressures down the road, then they may cut back on quantitatively raising or hike interest rates. Right, so changes in the interest rates affects the GBP. Changes in the interest rates affect the GBP. So which also reveals the Bank of England's outlook on the economy. If the Bank of England is asserting, yep. Developments in the Eurozone and the US. Like other currency pairs, GBP USD is also heavily affected by development in the Eurozone and US. US economic data directly affect investors and traders' sentiment in the markets. Good or bad data from the US can either send market participants running to the GBP or increased risk appetite or looking for safety in the USD on account of risk aversion. US economic data good or bad US economic data can send traders to US for safe haven or to GBP for increased risk appetite. That's not how to spell appetite. Appetite. The spillover effect. The Eurozone accounts for a majority of the UK's trade relations. Because of this, you should also keep your binoculars ready to see any development over in the mainland. Remember, UK is an island. Any bad news or poor economic performance could potentially lead to bearish sentiment towards the GBP. The Eurozone accounts for a majority of the UK's trade relations. Because of this, you should keep your binoculars ready to see any developments over in the mainland. Any bad news or poor economic performance could potentially lead to bearish sentiments for the GBP. So, good or bad Eurozone data could also affect the GBP. Driven by risk sentiment, albeit small, the GBP benefits from the fact that it boasts a higher interest rates amongst other major currencies. When traders are in search of greater yields, they will look to the UK because of the potential of getting a higher return on their investments. When traders want to unwind their high-yielding investments and look for USD nearest, they will start selling off the GBP. So, what we said basically in here, interest rates, yep. Trading GBP USD. GBP USD is traded in amounts denominated in GBP. Standard lot sizes are 100,000 GBP and mini lot sizes are 10,000 GBP. The pip value, which is denominated in US dollars, is calculated by dividing 1 pip of GBP USD. For GBP USD, this is 0.0001 by GBP USD spot rate. Profit and loss are denominated in US dollars. For one standard lot position size, each pip movement is worth 10 USD. For one mini lot position size, each pip movement is worth 1 USD. Margin calculations are based on US dollars. For example, if the current GBP USD rate is 1.5 and the leverage is 100 to 1, 1,500 USD is needed in available margin to be able to trade one standard lot of 100,000 GBP. Take note, a higher GBP USD spot rate requires more USD in available margin, while a lower rate would need less USD for margin. GBP USD trade tactics. One way to trade GBP-USD pairs is to take note of when key reports come out. GBP pairs tend to react more strongly to economic reports. I think I've written this before, but GBP pairs tend to react more strongly to economic reports. For example, if UK GDP figures, so gross domestic product figures, were to come in much better than expected, it would lead to a massive rally in the GBP. Even if you were to enter late, you could still grab a bunch of pips because GBP pairs really move a lot. Be careful though, GBP-USD and GBP-JPY pairs are the most volatile among the majors. In fact, GBP-USD moves around 160 pips per day on average. Because the GBP is so volatile, you might want to set wider stop loss orders to withstand all the stronger moves in the market. Because GBP is so volatile, wider stop losses could be set to withstand the strong moves in the market. Okay, cool. Japan. So, Japan. Konnichiwa. Located in East Asia, Japan is an archipelago of 6,852 islands, although a majority of its landmass is accounted for by the 4 largest islands. Despite being a relatively small country, Japan's capital Tokyo is home to 36 million hard-working citizens, making it the largest metropolitan area in the globe. Also, even though Japan is densely populated, Japanese have one of the highest standards of living, while also having the highest life expectancy in the world. Japan is also one of the most advanced and tech-friendly countries in the world. Can you imagine a world without karaoke, the Game Boy, or a Prius? Also, did you know that Japanese characters that comprise Japan's name, literally meaning origin of the sun, and that Japan is often referred to as the land of the rising sun? So, Japan, facts and figures and features. Neighbours, Russia, Korea, China. Size, 145,925 square miles. Population, 126,659,683. Density, 873.1 people per square mile. Capital city Tokyo, population 30,189,000. Head of state, Emperor Akihito. Head of government, Prime Minister Yoshihide Suga. Currency, Japanese yen, JPY. Main imports, petroleum, liquid natural gas, clothing, semiconductors, coal, audio and visual apparatus. Main exports, motor vehicles, semiconductors, iron and steel products, auto parts, Suzuki, Ichiro, Sony PlayStation, Samurai Swords, Mr. Miyagi. Import partners, China 21.3%, US 8.8%, Australia 6.4%, Saudi Arabia 6.2%, United Arab Emirates 5%, South Korea 4.6%, Qatar 4%. Export partners, China 18.1%, US 17.8%, South Korea 7.7%, Thailand 5.5%, Hong Kong 5.1%. Time zone, GMT +9. Economic overview. Aside from being the video game capital of the world, Japan's economy is ranked as the 3rd largest in the world. Since the end of World War II, Japan has been on a rampage, experiencing rapid economic growth despite the fact that the country is mountainous and volcanic. Because of the laws of the nature, this limits the growth of natural resources in Japan. In order to make up for this lack of resources, the Japanese economy has become very export dependent, with exports amounting to more than $694 billion in 2017. Not only does it make up 14% of the country's output, but is also the sixth largest in the world. Recently, Japan has been riding the cocktail of China's massive growth. With Japan being the nearest major economy, Chinese demand has led to massive shopping sprees of Japanese products. Not only does Japan have great food, how can you beat tempura and sushi, it is also home to one of the world's biggest financial centers, Tokyo. As you see in the movies, Japanese businessmen mean serious business. With so much money flowing in and out of Tokyo every day, traders and investors can use Japan as a proxy for what's happening in the Far East. Monetary and fiscal policy. While the Bank of Japan has been around since the late 1800s, only recently did the Bank of Japan gain independence from the Ministry of Finance. It was only in 1998 that the Japanese government passed laws giving the Bank of Japan control over monetary policy. Take note that the Ministry of Finance still remains in charge of foreign exchange policy, which has led to tension and continuous differences between the two. Right, okay. Still remains in charge of foreign exchange policy. So, Ministry of Finance still remains in charge of foreign exchange policy. Normally, the government and the central bank are independent of each other. One should not have any influence over others. This is not the case for Japan. Even though the Bank of Japan has gained independence from the government, there is a question of who really wears the pants. The Ministry of Finance has kept a watchful eye on the Bank of Japan, pressuring it to pass policies that would help the yen hit the Ministry of Finance's foreign exchange rates. Similar to other central banks, the Bank of Japan's main objective is that of price stability. Japan's main objective is price stability. The ninja bankers at the Bank of Japan make use of open market operations and interest rate changes to meet their goals. Bank of Japan uses open market operations and interest rate changes to meet their goal. One thing you should know about the Bank of Japan is that for a very, very long time they have kept rates at low levels, with the current rate sitting between 0% to 0.1%. Right. Because the rate is already so low, the central bank cannot decrease the rate to stimulate growth or create liquidity. Interest rates at low levels. So the Bank of Japan, not Japan, has kept interest rates at very low levels for a very long time. Because the rate is already so low, the central bank cannot decrease the rate to stimulate growth or create liquidity. For instance, in its efforts to fight deflation, the Bank of Japan has whipped out its shurikens and has flooded the markets with money through unorthodox quantitative easing methods. Quantitative easing methods are moves made by central banks in order to increase liquidity and money supply through the purchase of government securities. Quantitative easing measures. Moves made by central banks to increase money and to increase liquidity and money supply through the purchase of government securities. fight deflation, the Bank of Japan uses flooded the market with money through unorthodox quantitative easing methods, quantitative easing measures. This is sometimes called printing money because the central bank literally creates new money from thin air in order to buy back their government securities. In theory, the Bank of Japan believes that the increase in the money supply would lead to an increase in lending and spending. Over the years, Japan has created liquidity in the markets by flooding the economy with various programs that let the Bank of Japan buy or sell Japanese government bonds and bills. Purchase of government. So they will literally sell their government securities, and then they will just print off JPY to get their government securities back, which pumps JPY into the economy. Okay, getting to know the JPY. The yen is so hardcore that it didn't want to be named anything else. It came into the foreign exchange market called the yen, and up to now it is still called the yen. The yen is the yen is the yen. It is also tied in currency crosses, especially against Euro, GBP and AUD. Traders love me like the Japanese love their sushi. After the USD and the Euro EUR, the JPY is the most heavily traded currency, with USD JPY also ranking as the second most traded currency pair. Because of the role that Japan plays in international trade, there is a need for the JPY in order to complete international transactions. That's just how I roll. Are you ready for the Asian sensation? When investors think of Asia, they subconsciously think of Japan. With Tokyo being one of the world's major financial centers, Japan is often representative of what's happening in Asia. Japan is normally a major trading partner of other Asian powers. If businesses are doing well in Asia, this is normally reflected by the Nikkei, the major stock exchange in Tokyo. Right. JPY is the most heavily traded currency after EUR and USD. After USD and EUR. Japan. If businesses are doing well in Asia, this is normally reflected in the Nikkei. I'm always on the go. With Japanese reports coming out during the Asian session, it is only natural that yen trading is active during the Asian session. The yen can also be active in other sessions depending on what economic data is released. This should be expected. It is part of Japanese culture. They do business around the clock. The JPY is active during the Asian session, but it can also be active in other sessions depending on what economic data is released. But I'm all up for cheap thrills. With many investors looking for the most bang for their buck, some have resorted to carry trade. With the JPY having the lowest interest rate amongst the majors, it is normally used in the carry trade as a funding source. JPY is normally used in carry trades. as a funding source due to the low interest rates. The Japanese tend to think alike. Japanese asset managers tend to make the same investment decisions. This leads to highly correlated positions, which means that it's likely to see trends develop. Japanese asset managers tend to make the same business decisions. Leading to highly correlated positions. So more likely to see trends develop. I'm prone to breakouts. One characteristic of yen pairs is their tendency to consolidate for quite some time, then break out in one direction, then consolidate once again, then break out once again. Keep your eyes and ears ready because you never know when this might happen. Consolidate, breakout, consolidate, breakout. So, JPY pairs tend to consolidate for some time, then break out. Then consolidate, then break out. And I have a love-hate relationship with China. With China emerging as a major power in the world, its influence on the JPY will continue to grow. If signs point to further growth in the Chinese economy, it may affect the demand for JPY. How so? As we've said, China is one of Japan's major trading partners. Naturally, as Chinese businesses boom, they will need to order more from Japan. This in turn would increase demand for JPY, causing it to appreciate. Increased demand for JPY could occur as Chinese businesses boom. Yeah, that's alright. So, important economic indicators for the JPY. Important economic indicators for the JPY. Gross or GDP, not GFP, GDP. This measures the economic activity of Japan. It indicates whether the economy is red hot like lava from Mount Fuji or if it's in the process of harakiri. I do not know what that means, but I'm assuming it's bad. Measures the economic activity of Japan. Tankan surveys. These reports survey managers from a broad range of industries, questioning them on their views of the economy. Rising sentiment scores above zero indicate that Japanese businessmen expect business activity to pick up. Scores below zero suggest otherwise. So surveys managers from a broad range of industries. Questioning their view on the economy. Rising sentiment, scores above 0, indicate that Japanese businessmen expect business activity to pick up. Score, I'm guessing that the other one's called falling sentiment, scores below 0 suggest otherwise. Trade balance. The Japanese economy is heavily export demand dependent. Falling export numbers could lead to a decline in economic activity. Japanese economy is heavily export demanded dependent, not demanded, export dependent. Falling export numbers could lead to a decline in economic activity. Unemployment rate. This measures the rate of unemployment in Japan. High unemployment could lead to decline in consumer spending. How would they be able to afford their video games and anime? Yep. So, measures the unemployment rate in Japan. High unemployment could lead to a decline in consumer spending. So if consumers are spending less, then economy is not going to be good. So if the economy isn't going to be good, then foreign investors are less likely to invest in that economy. Therefore, which it could lead to a weakening of the JPY against other currencies. Okay. CPI, Consumer Price Index. CPI. In the past, the Bank of Japan has shown that they are not afraid to make moves to fight off deflation. Deflation, that's the opposite of inflation. So, I'm assuming deflation is when prices go down. Its trend shows that prices of samurai swords and shurikens continue to fall. It may lead to some surprise moves by the Bank of Japan. If trends show that prices of products continue to fall, the Bank of Japan could step in and make some surprising moves to fight off deflation. Core machinery orders. A large chunk of Japan's exports are comprised of machinery orders. The rise or fall in core machinery orders could reflect the current economic status, or the current status of Japanese trade. A large chunk of Japan's exports are comprised of machinery orders. The rise or fall in the core machinery orders could reflect the current status of Japanese trade. So a large chunk of Japan's exports are comprised of machinery orders. The rise and fall of these orders could reflect the current status of Japanese trade. So if more machinery orders are, if there are more machinery orders, then more money's coming in. So if more monies are coming in, then that means the currency must be getting stronger, because more foreign investors are trying to convert their local currency into JPY. So there's going to be a high demand for that JPY, which makes that currency stronger, which makes JPY stronger. And then the same thing if it falls, the opposite occurs if it falls. So if it falls, then there's going to be less people trying to convert their local currency into JPY, therefore decreasing the demand of JPY, which means if there's less demand, then the value of JPY is going to fall because there's less demand. Okay. Yep. So, okay. I am going to leave this episode here. In the next video, we're gonna carry on with this section with what moves the JPY. So, let me just save this first. Thank you all for watching, and I will see you guys in the next video. Bye!